Bitcoin, which honestly has been sleeping. I mean, really, talk about a sleeping giant here. I don't remember the last time we've had so little volatility on Bitcoin for the last 10 days or so, just really sideways action. Again, is it forming a bearish pattern? It might be. Even if it does dip, you really don't care about that until it tests the 91 to 92,000 level. If it breaks and confirms here, watch out below. As long as it holds here, it could just trade back up to the highs of around 108 to 109. All right, so just something to keep an eye on there.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth dives deep into the latest crypto charts and macro trends, uncovering key levels and potential market shifts. Stay out of the game with expert insights that could shape your next move. Don't miss out. Tune in now for the full breakdown.
Let's get right into the charts here on this Friday morning. We're going to flip right into the S&P. I always like to cover the S&P first because it gives us a grounding of where the markets are. Then we'll get into individual names here that are moving on earnings and other. Ultimately, what we see here is the market closed yesterday right around this level here, right? But ultimately, again, after hours, it was sideways with a little bit of an uptick and a downtick here and a float back up. So all in all, where are we? We're basically flat in the morning session. So that doesn't really give us much insights, but this is the kicker on a Friday. And this is really important, guys. All right. So listen, today is Friday. All right. By the way, happy Valentine's Day to each and every one of you out there. But if you have all the news we had and the rally that we had yesterday, and you're coming into a 3-day weekend where the stock market is closed. By the way, Monday we are having a major event, Q&A, instead of the game plan. It'll be an hour-long trading intensive kind of workshop with Q&A with me and the other traders. So tune in at 9 o'clock on Monday, even though the stock market is closed. But in general, you can expect neutral to upside. Now, it doesn't guarantee we're going to float up today, but again, neutral to upside bias on a 3-day holiday weekend with lighter volume anticipated. All right, so again, we'll see where it is at the end of the day. Right now, we're flat, but again, let's keep it on our radar. Flipping back to the charts here, going to the daily chart. This is where things get interesting, and I got a lot of huge alerts to give you guys. All right, so number one, yesterday on the S&P, we closed just above this line, which was the high pivot from December. Now, we did that here as well. Notice how they faked everyone out. They closed it above. They never confirmed it. It was never a confirmed breakout. It was what I call a fake out, and they brought us right back in. Here we hit it. Here we kissed it. Here again, we closed above it. So the reason why today is so important is because you have a chance to confirm a breakout on the S&P. Now, when you confirm a breakout, let's be extra super clear. It doesn't guarantee upside. There is no such thing as guaranteed in this market or in any asset investing market. What it does is it raises the probability of further upside, all right? So I always like to stress that it's all probability based. Our goal is to get the probabilities as high as possible, and then I take the trades when they are in that 75-80% success rate or better range. That's at least what I try to do. Don't do it well all the time, but nonetheless, I do my best, and I can win more than I lose, no doubt about that, as you guys see from these game plans. Okay, so a close above here, if we confirm it, it opens the door and raises the probabilities that we can travel up to this level. By the way, that's not a huge move. That's only about a 200-point move on the S&P. 200 points these days is about 4%, actually less than that, about 3%. So again, you'd anticipate a 3% move, and then I will be shorting the heck out of this market, probably playing those S&P puts, again, if we get up to this level. Now, if we fail to confirm, you look at downside, right? Downside into this level, that will be technical support right there. All right, so that's, again, a major heads up.
Bitcoin's upward momentum has sparked enthusiasm among crypto fans, with some foreseeing a fresh rally toward record highs. Along with Bitcoin's climb, other promising tokens are capturing attention, including OM, HBAR, and a novel meme coin called Agent IOM Manture boasts a strong surge over the past 6 months and remains poised to break key resistance at $7.76, signifying potential upside for those watching its next moves. HBAR, Hedera, has also witnessed remarkable gains but faces recent volatility as it lingers between $0.18 and $0.28, leaving traders divided on whether it might rally to $0.33 or test support at $0.13. Agent AI brings a twist by blending intelligence features with the playfulness of meme coins. This project addresses concerns about deceptive AI tokens while benefiting from community engagement. An exclusive presale offers tokens at discounts, rewarding early supporters who believe in its mission and technology. Agent AI has garnered attention from those seeking the excitement of meme coin hype and the usefulness of true AI capabilities. Combining all these elements creates a scenario where eager investors can find potential gains not just in Bitcoin's ascendancy, but also in the altcoins marching alongside it. That synergy can certainly spark momentum.
The NASDAQ 100 broke above a short-term trend line yesterday. I love this because this shows us a river theory. What's a river theory? This is something that, again, I created probably about 15 years ago now, maybe even more. It explains gaps and runs. All right, so notice how you have this trend line. Pivot high, right here, resistance, right here, resistance, and notice rejection every time. Here, resistance, rejected. So it's basically coming up to what I would refer to as a river. Okay, this is the river. The trend line is the river. And every time you come up to the river, it's like, oh man, like I could swim across, but I'm going to be so exhausted when I get to the other side that it's just not worth it. I might drown, all these kind of really negative kind of things. And so every time you come up here, you're like, no, I'm going to go the other way. And then you come, no, I'm going to go this way. Here, nope, I'm going to come back. Now you come up this time and you're like, holy cow, there's a bridge. Over at this area, the river, there's a bridge. I literally can just run over the bridge. So this is the gap above. And then when I get to the other side, I still have a lot of energy to run because I didn't have to swim through this big river, right? This wide river. And ultimately, that's where you get these gaps above, and they tend to rally and, surge higher. And that's exactly what the NASDAQ did yesterday, up almost 1.5%. Now, having said that, we are not at an all-time high. We're not even quite testing it yet, but we are getting close. In general, you have to think that we broke above this, we gapped above, and we ran. You probably at least test double top here. This would be a technical resistance here on the QQQ NASDAQ 100 tracking ETF, and that would be at the 540 level. All right, now right now we're at 530, 559, so we're still about $4.50 away from that. Doesn't mean we're going to test it today, but maybe we test it next week when the markets resume, or maybe we do test it today. We'll have to watch and see. All right, so that explains that. Now, this becomes minor support right now. If we confirm, it becomes major support. Notice these two trend lines are going to merge somewhere out here. And so if, let's just draw them out, and let's just game this out. I love gaming it out, right? So if we take our trend line arrow tool, let's say we come up here and we confirm, and then we back off and we come down here, these two trend lines will now be joined and they will act as major technical support. You could then expect a bounce and either a breakdown after that or a bounce to make new all-time highs. We'll obviously have to kind of figure it out and just take it day by day. And by the way, I think that's so important to understand is that, in general, I can always project out, hey, I think this is going to happen because the writing's on the wall with the U.S. debt and this and that, right? But in essence, every day with the charts, you're getting a new piece of the puzzle, right? Every candle that forms is a new piece of the puzzle, and that gives us more insight into essentially what the probability is for like the next day or two or even the next week. But once you start projecting out, like these analysts that come out and say, hey, I'm going to raise the target on the S&P to 7,000 or whatever by the end of next year, to be honest, it's just more for headlines. And I want to be clear on that is, when I get asked in these interviews that I do and everywhere else in the media, like, oh, do you think that this is going to happen? I'm going to give you my best guess based on the data I have. But there's so much time when you project out a year or 2 years or 3 years that so many things can change, so many new pieces of the puzzle can come in that ultimately things change, right? And then you have to be, as a trader, ready for that. If you're not, if you're rigid and you're like, no, I'm dead set on this happening, well, ultimately the market makes you pay for that, and it makes you pay by costing you money, all right? So always remember that. Couple wise words from many, many mistakes I've made in the history of my trading. All right, let's get into some things here. So let's just quickly look at the 10-year yield. The 10-year yield right here, it is down a little bit on the day. We closed back above here, and now we're right back in. We may confirm a breakdown today. So this has been a lot of whipsaw this week. We broke down. We never confirmed, which means we could break easily above. We did. Now we're back below. Again, any close below today's low would confirm the breakdown, and that would now make this major resistance. It was only minor over here because we never confirmed the breakdown. If we confirm here, this becomes major, and it increases the probability of a drop down to my ultimate target down here. And yes, in smart money stocks and ETFs, I am holding the TLT, which goes up when yields come down.
Bitcoin may be on the verge of a breakout, and traders should keep a close eye on key signs pointing to a potential surge. After weeks of sideways movement, Bitcoin's price has shown signs of stabilization, a phase that often precedes a major shift in market sentiment. Historically, when Bitcoin consolidates for an extended period, it sets the stage for a surge in demand, particularly from retail investors. Now, with retail activity showing signs of recovery, the market could be gearing up for its next big move. Over the past 30 days, retail investor activity has only declined by 2%, a significant improvement compared to the 20% drop in January. This moderation suggests that selling pressure has eased, and the market may have reached a point of equilibrium. When retail demand stabilizes, it often serves as a foundation for renewed growth, creating an environment where price movements become more bullish. Analysts have noted that previous increases in retail demand have consistently been linked with price rallies, making this a key metric to watch. Adding to Bitcoin's strong outlook is its realized market cap, which recently hit an all-time high of $857 billion. This milestone reflects the asset's continued strength despite short-term price fluctuations. Long-term holders have been capitalizing on higher prices, reinforcing confidence in Bitcoin's long-term value. Meanwhile, new investors are entering the market, helping to absorb selling pressure and maintain positive momentum. This dynamic between experienced holders and fresh demand suggests that bullish sentiment remains intact, making a case for further price appreciation. Another crucial factor in Bitcoin's potential breakout is the number of investors currently in profitable positions. Analysis of Bitcoin's global out-of-the-money metric shows that a significant percentage of addresses are in the money, meaning they purchased BTC at a lower price than its current value. This often fuels a fear of missing out, FOMO, among potential buyers as they rush to enter the market before prices climb higher. With fewer investors out of the money, there is less selling pressure, further supporting the possibility of a steady and sustained price increase. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoinzilla for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.